So I'm currently seeing a 30-minute candlestick pattern that has developed within the pre-market chart. If you use this new information I'm going to be providing to you along with last night's video, you should have a phenomenal green day trading options heading into the market today. Let's get straight into it. So what we're going to be doing is we're going to be comparing December 18th and December 19th of 2024 to today's pre-market chart. This is what I want you to be aware of. So in terms of today in last night's video, I made it very, very clear that we can potentially drop towards the previous day highs. As you can see, the SPY is starting to drop towards those previous day highs. Now, with that being said, this is what caught my attention, man. Take a look at this 30-minute wick right here, right before the market closes, and then take a look at this 30-minute candlestick in the pre-market. This 30-minute candlestick in the pre-market is going to make or break the SPY for the overall morning play. And I'm going to explain to you exactly how you can play this based off of this 30-minute red trend reversal wick right here. So we're comparing that wick to this overall price action right here. You can see you have this red wick into the close, like I just showed you on December 18th compared to Tuesday's overall price action. And then take a look. The SPY is gapping up towards the same exact level into the 586s. You have this red trend reversal wick right here. Right? So what happens at the market open? At the market open, we have a spike above the high of day, and then it forms a red bearish 30-minute candlestick confirmation. Once it breaks out and forms a red bearish 30-minute candlestick confirmation, the SPY starts to sell off. So in this situation, if you are seeing red bearish 30-minute candlestick confirmations towards those pre-market highs, right, as SPY is starting to break above resistance, you're going to want to be buying puts if you're seeing red bearish 30-minute candlestick confirmations. And then in terms of calls, you're going to want to be focusing on the levels that I gave you yesterday, the lower oversold levels for calls. Once the 30-minute chart flips green, start buying the dips, right? So it can play out as a potential trading day where it's going to try to attempt to close strong trading within a channel, right? So I explained to you what to do in a bearish situation. Look for breaks above resistance, red bearish 30-minute candlestick confirmations, right? And then in terms of buying the dip, wait for it to sell off. In terms of the levels, look for a green bullish 30-minute candlestick confirmation towards the buy zones, which is going to be at 588.50 and 587.50 and 586.50. That's what I wanted to share with you in terms of the opportunities for puts if we're reacting bearish as it's going up a little bit towards market open, if that occurs. And then in terms of the dip buying levels, if we're reacting bearish. Now, in terms of higher levels, this is what you need to be aware of. So I want you to think of it as this. In terms of the bulls, to take full control, this is what needs to happen. We need to see a break above this overall wick. So think of this wick right here as this wick right here. I'm showing you a bullish example here. You need to see a break above this. And then when it drops back down, you need to see a floor above the previous break level, right? You see how it didn't form a floor here. It just kept selling off. Then it started to form a floor at the lower levels. So in terms of this situation, what you would need to see for the SPY to just keep on trending up is you need to see a break above 591. If we break above 591, start to go to 592, and we drop back down and we're forming a floor. The candlesticks are bullish and we're holding above. The bottom wicks are above 591 after a breakout and we're forming a floor. In that particular situation, the SPY is going to start to consolidate and it's going to start to uptrend a little bit higher, failing to retest back towards those overall levels. Those are the two situations that can potentially play out. So you're simply looking to identify, right? If 591 is reacting as a floor and it starts to break out, drops back down, retest, reacts as a floor, it's overall going to be bullish, right? But if 591 breaks out and we're just reacting as a resistance, dropping back down, forming red bearish 30-minute candlestick confirmations, failing to form that support level, we're going to sell back off into that 588 to 587.50 range. And I gave you the levels to buy calls if we're selling back off, right? Use the green bullish 30-minute candlestick confirmations. And I gave you the levels in terms of put options and what to look for if we're failing to form a floor, if it's red bearish 30-minute candlestick confirmations, right? But if we are forming that floor above the 591 level, the next level we're going to be heading to is going to be 593.40. Next level above that is going to be 595. You can look for puts at 595. That's what to look for, man. It's just one thing you should be aware of as well. Last time this happened, in the pre-market, in terms of what happened, the SPY did end up dropping, So in terms of the gift was to buy puts into the morning spike. In terms of the confirmation, there was a clear resistance right here. But what I'm trying to tell you is the SPY did end up retracing basically towards, half of this wick right here, right? So in terms of where it ended up retracing in this situation, it ended up retracing back to 587.60. The best fucking level to be buying calls is going to be under 588. Use the green bullish 30-minute candlestick confirmation in that situation, right? So that's what you're going to be looking for. That's what you should be paying attention to. In terms of buying calls, it's going to be a lot more difficult, in my opinion, and riskier if you're trying to buy calls with a break above 591, looking for that floor. In an ideal world, we would like to see a red bearish 30-minute candlestick confirmation into some pre-market break, into some market open breakout situation, and then a floor, a green bullish 30-minute candlestick confirmation below 588.50. That's what I'm going to be looking for, man. Just pay attention to this overall situation because this looks very similar to, December 19th, where as long as we get a bearish 30-minute candlestick confirmation, we drop back off to 588, and then we start to pump once we hit those dip buy zones with the green bullish 30-minute candlestick confirmation. And in this situation, just let the channel play out. Let the chart develop. I mean, I gave you the best levels towards that like 591 and below 588 is going to be that overall best range to be trading in today, right? And just wait for confirmations, wait for the chart to play out, and keep playing the retest. Scalp the overall retest. Look at this chart. This chart is fucking golden. With that being said, we're going to absolutely crush it today inside of Team Roar. I will see you guys within the chat. I'm going to be signing off here.